Good evening, ladies and gentlemen, and it's very nice to meet a few of our shareholders here tonight, and hopefully a few of our future shareholders. I'll skip through the disclaimers because I think we've all read through those. Essentially, as an introduction to Scotgold, Scotgold was a company formed in 2007 by an Australian entrepreneur with a specific purpose of developing the Conon project in Scotland, which he acquired from Caledonia. It's now been through various iterations. It's had various work on it. Since October this year, we've gone back to the drawing board and we've gone back and made sure we put our best foot forward. And at the end of the day, we've got a 200,000 ounce deposit. We're going to mine it at a rate of produce at about 24,000 ounces a year for 8 years, with very low costs and relatively high grade of just over 11 gram a tonne. The important thing for us is that we now have all our permits in place. That means that essentially the last hurdle we have to cross is the finance hurdle. And when we got through that, we'd anticipate in 2017, all being well, we'll move into the construction phase. In terms of our other assets, Conon is the jewel, but Conon sits here within the Scotgold's Grampian Project. I'll show you a map a little bit later of what that covers. But it's a big area. It's some 4,200 square kilometres, some 125 kilometres in strike length, so it pretty well crosses the whole of Scotland. We've got about 9 prospective anomalies just in the Cononish area alone, and we have a huge database, which we'll also come on to later. At the moment, this attracts very little attention or valuation within our share price, but I think the key is that once we get the Cononish mine up and running, then all of a sudden, people will realise that actually mines can be built in Scotland, they can work, and there'll be a lot more interest in the exploration potential. So just moving on to what the Cononish actually looks like in the Dalradian Belt. This is the Dalradian Belt stretching across Scotland and Northern Ireland. It's a continental scale feature which runs across into Scandinavia and across into the States. You have the Conon deposit sitting at now some 3.5 million ounces, Omar sitting at 500,000 ounces, and ourselves sitting at some 200,000 ounces. Obviously, what we'd like to find is we think there's a very real prospect of more Cononishes, similar scale, and obviously what we'd like to see is something along this scale, and geologically there's no reason why we shouldn't. Just in terms of where we are, for those of you that are Sassenachs and live south of the border, we're just up the... beg your pardon. Sorry. That's wrong. We're just up the A82. I mean, compared with access, compared with many of the gold mines in the world, we're relatively easy. I live down south and I can get to the office by 10 o'clock on a Monday morning if I leave early enough. You fly into Glasgow, it's an hour and a quarter on the road up to Tyndrum. So we're well served, even though we are actually classified as part of the Highlands. This is just a view. It is an extremely picturesque area, and it is part of the national park, which has been one of the big hurdles we've had, and essentially why it has taken us as long to get to where we are has been to go through a planning process, and my predecessor has done a sterling job of steering the company through that, and there's been a lot of vociferous arguments both for and against. The bottom line is that we've had tremendous support from the local community. The whole process has been well documented on the BBC and other channels. And the bottom line is we're now at a stage where the consensus is we should go ahead. We had our planning application renewed in January this year. That went through without a single objection and a unanimous vote by the Parks Board. So we are all set and ready to go. This one simply shows the same value, obviously different time of year, although there is still some snow up on Ben Louis at the moment. They've had such a wonderful summer up there. This is looking at the farm. This is the Cononish farm. The whole lease is known as Cononish. There's the spoiled heap you can see here with the adit which goes in just about the M of mine, and then the black outline is the trace of the quartz vein which runs through the hill. Essentially, in terms of what's happened and who's the team involved now, as I said, Conon has been through a number of iterations on the planning side. It then also had a problem with the financing back in 2013, and things got into a state where the company was sort of sitting, wondering how to move forward. It had some debt on its books with no income, and at that point in time, a chap by the name of Richard Harris identified it. He's an ex-mining engineer, and he said, "Well, look, I can see there's asset in the asset there. It's a finance problem, not an underlying quality problem." And he looked at it, and he brought in Nat LaRue, who is a gentleman who has slightly deeper pockets than most of us, and persuaded Nat that actually, yes, it is a good investment. He then in turn invited me along, and I'm principally an operator in practice. My background is in developing mines both underground and surface, and I brought two mines into production from scratch. So the idea was for me to take over. Let's get this show on the road, and let's get it built, with Nat providing the hand holding as necessary on a financial basis until the company can stand on its own 2 feet. Just as a corporate snapshot, as I said, because of the obviously historical legacy, we are listed on ASX and AIM. That has various pros and cons to it. It does mean that we do have a slightly higher overhead. It does mean we also have access to the Australian markets. We have thought about rationalising that, but given that we are approaching a point in time where we're going to be looking for major finance to build the project, we'd obviously want to look at make sure we keep all our options open until that's resolved. So going forward, we'll review that again. We have about just over 1.1 billion shares on offer. Shares out at the moment, on issue rather, and that gives us a market cap of just over 8 million. In terms of the top 5 shareholders, as I mentioned, Nat LaRue is the guy. He came in October last year, principally by way of a convertible note. Subsequently, in order to remove the debt that the company had, we did a rights issue, which then underwrote. So his percentage grew significantly simply because of the underwriting, because we said, well, we need to get rid of this debt, and he was prepared to put his hand in his pocket to do it. So we did that at a relatively low price to encourage people to help follow us, and many of our loyal shareholders did, but obviously Nat was one who coughed up the seriously big bucks. Richard Harris, again, is a major shareholder, and then we've got some other groups of shareholders. It's a little unclear on AIM who is who, but I'm very pleased to note that we've got a few here tonight, and I think there's a few more at around about the 3% mark. At the moment, we don't have many institutional shareholders, but we expect that will change when we go into the major fundraising. In terms of the story so far, which I've sort of touched on, as I said, in October 2014 was when the shareholder approvals were achieved for Nat to come in and fund the company by way of his convertible note. So that's when his rights to take over on the board came into effect, and the board, there was a big board change. I was brought in at the same time, and the two legs of the program were first to stabilise the company from a finance perspective, hence the rights issue and paying off the debt that we had. The other side of the coin was to put our best foot forward technically, and so we immediately launched a re-evaluation, a re-estimation of our mineral resources. So in 2014, when the money from the rights issue came in, we redeemed the debt. In January 2015, when CSA Global out of Horsham had completed their resource estimation, we released that, and that was a significant improvement, not only in grade, but more significantly in confidence level of the material that we've identified. So we moved a hell of a lot of material from inferred up into the indicated category. In January 2015, I said we also got our new planning and permission approved, because the permission was there, but the rules are that you have to start construction within 3 years. So that was issued in 2012, so it was due to expire in 2015. As part of the renewal, you effectively have to go through exactly the same process as if you're getting a new permission. And whilst we did that, we also attached various variations to the condition. One most significant of which was that we were allowed to work 24/6 on the processing plant. Previously, we'd had a processing plant allowed to operate 18 hours a day instead of 24 hours a day. And those of you that are metallurgically minded will understand that these sorts of continuous processes work better if they're allowed to run rather than on a stop-start basis. So that was a big saving for us in terms of efficiency. It also meant we can scale down the plant a bit, so we can, for the same tonnage throughput per annum, we can have a lower capacity per hour. Then the next milestone was we raised some more cash in 2015. Based on the resource statement, we then put out a reserve statement in May, which again was very positive. And now, just this couple of weeks ago, we put out our BFS results. So we've established a sort of track record of delivering on the timelines goals we originally set ourselves. What's still to come? Obviously, the main hurdle still left is the financing. And from that point of view, we're looking at a range of options for that. We have already received several indicative proposals from potential debt providers, and we're busy evaluating those, both in terms of sort of coupon rate you have to pay and the quantum they're likely to offer us. From a shareholder perspective, we'd like to maximise the amount of debt that goes into it, but there's obviously a certain amount of prudence that has to come along with that. Post that, we're also reinvigorating the exploration project, and we've got a couple of Spanish structural experts who are looking at our data that we have, and that will result in a new prioritisation of the ground that we've got. And we're quite excited about how that's panning out, and those results will be coming out in probably late Q3. Q1 2016, on the basis that we get the finance complete, we will then, as soon as the finance is complete, we have a certain amount of what they call conditions precedent, sort of suspensive conditions, sorry, that's the right term, which are things which have to be done for our planning permission to come into effect. And they are things like, widening the access to the road, providing a community car park, those sorts of small cost things, which we will only do when we know all the financing is placed. That then has the effect of putting us into development proper and starting the time clock on that. If that happens in Q1 2016, we would expect our first gold production in mid-2017, and we've given ourselves a 6-month ramp-up period to full production by the end of 2017. So in terms of Cononish, to sort of recap, we own 100% of it. It's in a very low-risk area. We're permitted in a relatively difficult terrain in terms of environmental permitting process, but we've gone through it. It's been a very, I would like to say arduous, but it's been a very intense process. And I think it's made sure that every I is dotted and every T is crossed, which gives us every confidence that if we do the right things, we'll be able to carry on. And we've got a significant resource for us, and a 200,000 ounce reserve and a bankable feasibility study. Just coming on to the resource estimate, and I don't want to go to bore you with all the details, but essentially the big change from the previous resource was that we moved a lot of this material, which was inferred, has moved up into the indicated category. And whereas the previous mine plan that the mine had done back in 2012 had actually only about 50% of the material mined was going to be actually in the reserve. For this mine plan, 100% of everything that is in the mine plan comes from a resource, measured indicated resource, and through into the reserve statement. So much higher confidence. Just a quick schematic of the ore body. I say this is just the way that it's been interpreted in 3 dimensions. The old plan had the ore body interpreted in 2 dimensions on a polygonal methodology. This is red represents the vein, blue the dikes and various offsetting structures. This area to the west is an area that's open for future drilling and upside potential. This is the ore reserve statement, and again, don't want to bore you with the details, but the important thing is the grade, 11.5. Overall 11.1, and then as I say, then you look at you've got the silver as well, equivalent, which adds about 0.7 of a gram. This is the portal to the mine. This is to say it was put it. We've got an exploration adit which goes in the side of the hill, and this same portal will be the main portal to the mine. So in terms of an environmental impact, it'll be minimal. There'll be an entrance to the mine here, and then you'll have a big green barn sitting outside of that, which will house all the processing plants. This is what the new underground mine design looks like, and that portal you looked at was sitting over here. We've got approximately 1 kilometre of adit, which comes in this way. The whole idea of this mine design, which is now optimised according to the geological model, is that we prioritise these areas over here, which are thicker and higher grade. It's enabled us to plan a series of ramps, which minimise the amount of waste development which goes on through this unpaved area in the middle. And it gives us additional flexibility. Whereas previously we were going to truck down the ramp, we've now incorporated a system of ore passes, which reduces the amount of haulage costs. And by doing that, it enabled us to be able to zone the mine off. So whilst this is laid out for a mechanised long hole open stoping methodology, because we can zone it off, if we've got thin areas where we can do some trial handheld conventional shrinkage stoping, that can be accommodated within this. So those areas where that would apply are likely to happen in the later part of the life of mine anyway. So what it means is we will start off with the mechanised mining. We'll experiment with the handheld conventional methods, and if that worked, we indicate that it could be about 10% saving on costs. So that's further upside potential. This is just a summary again. I think, as I mentioned, most of it. So it's 8 years mine life, 23,000 ounces per annum, more or less, 72,000 tonnes per annum. We're unlikely to change the tonnage throughput rate because we're constrained by the geology of the geometry rather of the ore body. So where we see the upside will be in extending the life of mine beyond the 8 years. Just a salient feature of the BFS is 24 million, and that includes all life of mine capital, i.e. fleet replacement, into 5 years, etc. But the important number is the 18.5 million that we need to raise to actually build the thing. But as you can see, we're sitting with very low operating costs at around the 523, and all-in costs, including capital, come out at less than 700. In terms of cash flow, we've got a peak cash flow of pre-tax cash flow of 43 million, and this is done at $1,100 gold. More at for every $100 that the gold price goes up, you can add another 10 million to that number pretty well. So it is geared to the gold price. But as I said, we can go all the way down to 700, and we still make a small profit. And as important there, with the very high returns we've got, we can afford to put some debt into the company. This is then again just shows the sensitivity to gold price, and you can see you basically go from 43 to 53 as you go up 100 by 100. This is just a long section through the ore body. So that adit comes in on this level here. This indicates the proven and probable. So that's the proven is along the actual adit itself. We've got about 1 kilometre there. It doesn't quite go to the fault here, so that's a bit estimated to that point. But we have significant upside potential. We've identified these definite pay shoots here, and where these go down dip is still untested, and what happens to the west of this fault is also untested. So I say we will be getting into this and start drilling this as soon as we're into production, but we don't see ourselves changing the mine plan now. We see ourselves getting in production, drill it out, get a new reserve out, and then going back to the Parks Board and saying we want an amendment to our plan, by which time people will be employed, and we'll be looking forward to a few extra years of formal employment. So in terms of our challenges, I mean, the key thing, one of these was that we're small by gold mining standards, and there from a financing perspective, it can be It can be an interesting conversations I've had with various people. From the sort of generalist funds, they consider us a little bit of an anomaly because we're gold, and for the gold mining funds, they consider us a bit too small to be worrying about. So that's what we've got to look at. I think we're very encouraged with the feedback we've had on the debt, and then once we know how much we can get debt, can then go back and top up with the necessary equity. Before I finish off, just to go back to the Grampian project, this is our holding. We also have another fourth holding over here called Ochils. More or less covers the sort of width of Scotland along the Dalradian belt. It's a big area, and this basically, and it's highly prospective. Just moving on, this is just an area, for example, which is 3 kilometres. So 3 kilometres by 3 kilometres around Cononish, we've got 9 gold anomalies here. And so what our focus is on from the structural study is to try and understand what makes Cononish different. Why are the structures around Cononish so well mineralized compared with some of the other structures? What are their characteristics? So that we can then look at not just where we have gold showings, because we've got gold showings all over the place, but where we can find similar structural settings and then start doing the more expensive drilling type work to go and find them. So given this is just what's happening around Cononish, which is our little laboratory, once we understand that, we think we'll be able to unlock significant upside for the rest of the exploration area. And that's just an indication of some of the data we have. We've got a massive database, both from the British Geological Society and for the various companies that have worked here. We're one of the few people to have it, and part of the project we're doing at the moment is to rationalise that and look at how we interpret that better, rather than just going out trying to get more data. Let's look at the data we've got. And that's just a slightly bigger picture of the same thing. So thank you very much. Thank you for your attention.
Lady there.
Thank you. I mean, you describe yourself as being in a safe place, safe jurisdiction, I would have thought. But I mean, what do you think the political risk is, given that the Scots Nats have got all their MSPs down here? And,
I think that the main...
Do you have a dialogue with them?
We're extremely well supported by the politicians north of the border, because they see us as being Scottish, and we have mooted trying to develop a sovereign wealth fund for Scotland based on gold. That's not gone very far so far, but they are very supportive. I think from the point of view of what could potentially happen to an independent Scotland, what has happened so far is that there's been a separation through the Smith Commission of tax-raising powers, and the Crown Estate, which hold our licences, are being separated, so they are going to be focused on Scotland. So given one of the Crown Estate's assets is its gold and silver rights in Scotland, it makes it very important for them to actually help us get this thing off the ground. In terms of what else might happen if you had an independent Scotland, are they going to go back to the groat or what have you? I think from our perspective, that would probably be upside potential, because if we're paying people in groats and selling in hard currency, it might be beneficial. But jokes aside, we don't see any significant risk to being an independent Scotland or politicians. We see support so far.
Thank you. Gentleman there.
You've mentioned, I think, the life of mine costs. What are your all-in costs?
All-in costs are just under $700 an ounce. That includes capital. So if you had the whole mines, the life of mine, all the operating costs and all the capital costs, by all the gold we're going to get out. The lot. $700, just under.
Right. Thank you.
Gentleman just behind.
Do you have a labour force close by, or do they have to come a long way?
No, well, most of the, we'd anticipate the vast majority of our labour force coming locally. We're going to require about 62 people for the project, and it's a mechanised mine, so we have in the area skill sets for the logging. You see these machines that take the tree by hand, chop it up the bottom, strip all the things off, do a baton dance with it and put it in a pile. Those sorts of skills are the same sort of skills you need on a drill rig or a loader, what have you. So equipment drive operating skills are there. then you're talking about electricians and mechanical guys, which are also available. So all those sorts of skills will be taken in. You will need some experienced survey type people, we'll need some experienced geologists, we'll need some experienced mining supervision, but they'll be the minority, they'll be in the handfuls compared with the rest of the shift. So people are desperate for formal work there. I mean, it's an area which is predominant by the tourist industry. People don't have all year round work, they don't have formal employment, they find it difficult to get mortgages and houses because of that. So the concept of having a formal employment in the area is extremely attractive, hence the magnificent support we've got from the local community.
Next question.
Just underpinning what the gentleman said behind, you raised a very good point. You mentioned you've got an all-in cost of $700. Now what happens if the gold price goes back to where it was 2004, 2005? The support level breaks at, say, 900, 950, 1,000. I mean, what steps are you taking to reduce your all-in cost? Because at the moment, if the Chinese keep dumping gold on the open market as they had done, there was an expectation that gold was going to go back $1,300, $1,400, $1,500 an ounce. It's barely touching 1,100, and if the support breaks at 900, God help us. So, I mean, are you going to do anything to drop the all-in cost to increase the margin? Because if it comes down that way, you need to come down on the bottom end. And secondly, within that, obviously you've got a Scottish majority government in the SNP. What's to stop them nationalising your licences through the Crown Office?
Well, okay, take the first one first. I think in terms of the cost structure, we obviously we are a bit able to high grade as much as anybody. That's a normal thing a mine does. If the gold price is going down, you look at high grading, and because your cutoff goes up essentially. That's just a mechanism which we all use. That $700 isn't based on high grading. That $700 is based on taking the reserve and grades as it is. With an underground mine like this, we're actually far better placed to high ground than, say, your typical open pit mine. Because a typical open pit mine, you have to go down and you have to decide your strip ratio at the beginning and go down on that. With this underground mine, we can go in and we can go and take the high grade zones out, and we can come back later when the gold prices come back up and take the lower grade zones. An open pit mine can't do that. And if all that doesn't work, then we have the ability to quite easily to mothball it. If the gold price goes back down to $300 an ounce, maybe we would have to mothball it. But that can also be very easily done and restarted again compared with an open pit mine. So I think from all those aspects, we're not saying there's no risk, but we're relatively low risk compared with other comparable operations. In terms of will the Scottish government nationalise it, I mean, well, your guess is as good as mine. I don't think they could possibly do that and stay part of the even if the Scottish government got independence, they still want to be part of the Eurozone, the EU, and there is actually a sort of renaissance of mining within Europe at the moment. And so governments are moving more to encouraging mining and regenerating mining rather than destroying it. And if you were to undermine your whole security of tenure, which is the foundation block of mining, then it'd be back to square one. So I think anything's possible. I think that's highly unlikely.
Yeah, because you've got an SNP majority government that's leaning further left than Jeremy Corbyn at the moment. And if the gold price recovers, the chance of nationalisation goes up.
Maybe you better buy another car then, so you
Next question. Anybody got any questions? Rather political debate. Anybody else? Questions? It looks like the mine has been mined before.
No, it was an exploration adit.
Oh, really?
So it was a kilometre developed of exploration adit by NX in the late 80s.
Right.
But it's given us a fantastic asset in the sense that, typically when you're looking at a mining project, you're looking at a bunch of boreholes in space and then some geologist's interpretation of how they all connect up. Whereas in our thing, you can actually walk down it, you can touch it, feel it, you can see the continuity along that adit. So it's a tremendous asset.
Time for one more question if anybody's got one. Gentleman at the very back underneath the clock.
mentioned you highlighted some of the possibilities of ore extensions, possibly 4 of them. Do you think it's possible? How long do you think life of mine will be extended for?
Well, I think if one looks at the ground, at the sort of ability for us to go down with a ramp, how far we could go down practically, and the fact we've got areas accessible on strike without even going underground any further, you know, I think sort of a 2 to 4 year horizon is eminently achievable, and you know, we would hope to perhaps even do better than that. And that's at Cononish, and our best bang for our buck will be getting more reserves at Cononish and extending the mine life at Cononish. And Cononish will throw out, once we've put the capital in place with these low operating costs, Cononish will be throwing out a significant amount of cash, you know, in our scale of things. And so that will enable us to do the things like looking for all the other areas that might be out there within the 4,200 square kilometres of ground we've got. And with the experience we've got with the national parks, that's a big feather in our cap, both nationally and internationally. In Europe, people recognise that getting permitted in a national park is not easy. And so with the skills and the money that's providing them, we will start to look, you know, further afield for similar scale, small but high quality, high profitability projects.
Thank you. Thank you, Richard. Thank you very much. And finally, can I welcome Scotgold as the CFO of Resources?